In this video, I'll be showing you the single biggest mistake that high earners and business owners make on their taxes. Why this one mistake is quietly costing more than every small deduction that you might be chasing combined. Through working with successful people at Perspective Wealth, seeing literally thousands of balance sheets and tax returns, I discovered that most of them are making the same fundamental mistake without realizing it. And it has nothing to do with whether they have a good accountant. That's exactly why I'm making this video today, to show you what the mistake actually is, why even smart and diligent people make it, what it's costing you, and how to fix it so you can stop overpaying year after year. Let's get right into it. For most people, saving on taxes is just deduction hunting, and they think that if they can just find those silver bullet deductions, it's going to wipe away all their tax. It's not a deduction issue, it's a structural issue. And this mistake leads to a very reactive and often snowballing effect. One bad move here boxes you in, and now I have to do another bad move over here to get out of it. I'm talking to you folks who are buying real estate and escort. So what is this big mistake? I'm about to tell you. It's going to blow your mind. Now, before you dismiss that as an oversimplification, let me explain. See, for most people, they have tax preparation, and maybe they're offered a goodie box of some deductions. But here in a second, I'm going to walk you through what actual tax planning looks like. But first, I want to touch on why does this even happen? See, most people that have tax problems are busy, and busy people don't have time to spend on their tax problems. They're also unaware of the tax code changes and often most of the tax code itself, because they're assuming they have a CPA that's doing it all for them. They're looking these things up and considering all these different strategies. But the typical strategy is very walled off. The CPA does a tax return, then they probably have an advisor. That advisor maybe has a balance sheet, but probably not likely. It's just more of an investment account relationship. And so we have the left hand and the right hand, and they don't know what each other's doing. Now that you see what the mistake is and why even careful people make it, and you want a real plan that's actually built around your specific situation, click the link below. Schedule a call with our team at Perspective Wealth. We're here to look at your specific situation, show you how to optimize your plan altogether so you can apply this to your own situation. Let's go into what does this cost people over time. If some of our clients, it's $50,000, some of them it's $500,000. Let me give you 3 examples that we've recently worked on where tax planning could have or did save them a fortune. Example 1, we had a client who wanted to buy $2 million worth of stock from a partner, and they were recommended to do a redemption where the business actually buys the stock, pays back the seller, and the buyer has a higher stock position through accretion rather than a direct purchase. That would have been a $600,000 mistake. But thankfully they called us and we talked through why you would rather direct purchase that $2 million stock so that I get that extra $2 million of basis. So when I go to sell it later, that's going to save me at least $600,000 in taxes. Big deal. They were recommended the redemption, not through a tax planning lens, but purely just through a legal lens. Now, a second example I'll give you, one that's really unfortunate because we came in too late. We met them too late. We needed to meet them 5 years ago. But this is a really good example of what tax planning could have done for somebody. They started a great business. It's when it started to become profitable, they picked an S Corp election rather than a C Corp election. Now they're selling it for $40 million. And that company would have largely have sold, if not entirely sold, tax-free if they are C Corp. Instead, they're getting slapped with a $15 million tax bill that was so easy to get in front of. They had a tax planning relationship with their CPA and their advisor, or if they'd have met us 5 years ago. The third example is we had a client come to us who was saving with their old advisor $50,000 a year into their taxable investment account. They're 10 years out from retirement. They're 55 years old, retire at 65. And we recommended we should consider the mega backdoor Roth rather than the taxable investment account. So $50,000 a year into the mega backdoor Roth for 10 years, rather than going into the taxable investment account for 10 years. By 65 has an $80,000 better off tax position, and by 75 has a $400,000 better off tax position. And that is thanks to tax planning. But For most people, tax planning looks like this. They just buy stuff to get out of taxes. I grew up on a farm, and I like to use this analogy where the farmer buys tractors to get out of taxes. And that is not tax planning. The definition of planning is thinking ahead. So going to the John Deere dealership in December with one thing in mind, which is just to wipe away this year's taxes, is not planning. So what is planning? Let's get into that. I have this beautiful illustration that I've built to provide some color and some context to what tax planning is to us. First and foremost, it's year-round access. That client that wanted to do that $2 million redemption, well, they knew that they could call us anytime. We've been talking throughout the year about this specific goal. And so when they were given this recommendation, they called us and we were able to get in front of that. Year-round tax access, very important. Another really important piece is multi-year modeling. We were able to give that effective backdoor Roth strategy, that effective mega backdoor Roth strategy because of multi-year modeling. And last, and most importantly, is the fall strategy meeting. By meeting at least once a year in a strategic manner during the year rather than at the very end or even the next year, unlocks so many opportunities that most people are missing because they're either trying to do something in December or they're doing something after the year's over. And by just infusing and regularly meeting every fall, we've been able to identify strategies and get them executed before year end. That's tax planning. Now, how do we bring that to life? Well, first and foremost, you got to have the right team. Second, you got to get your left hand, your right hand talking to one another. Wealth and tax have to be working together. And third, you got to carve out just a little bit of time. Take some time to have those strategy meetings, but it will save you a fortune if you do. Now, you've seen the biggest mistake you're making on your taxes, treating them as something that you file instead of something you plan, what it's costing year after year, and you can stop letting an avoidable mistake quietly hand the government money that should have stayed with you. If you want a real plan built around your specific situation, click the link below. Schedule a call with our team at Perspective Wealth. We're here to show you exactly how to make the switch from filing to planning for your specific situation. I'll see you in the next video.